So, what's up, my friends? Man, I'm stoked. Why am I stoked, right? Just a quick one, right? I changed my mic. It's this large thing over here, even larger than the size of my face. Can you imagine that? So that's it, right? All this is just to give you a better experience so you can hear me better, feel me better, and understand me better. So, yep, that's just a quick announcement. Not that it's really relevant or at all, okay? So back to the markets, right? So this week, we are going to talk about crude oil, right? That's the first thing, right? So crude oil is a market that I would say affects all of us, right? As long as you know you're pumping petrol, you need to pump petrol. So you need to make sure that you want to get the cheapest price on oil all the time. So I would say that is a market that really affects us consumer. So and that's it. I'm going to share with you on why I think crude oil has not bottomed out yet, right? Because honestly, I'm looking at the charts, right? The longer term charts. I don't think crude oil is showing any signs of bottoming. So that's it. I want to explain to you then what are the factors I'm looking for before I conclude that okay, right, crude oil may be showing signs of strength and I may be looking to have a longer term bias on crude oil. So I want to share with you what are the two things I'm looking out for in crude oil. Okay? And the next thing I want to talk about is how that trading entries, right, is just part of your trading equation, right? Entries is one thing, right? Your trade management and your exits is something else that you also need to focus on. If not, it's even more important than your entries itself. So I'm going to explain to you how two traders, right, they have the same entries, but different exits, which results in one trader making money and one trader losing money. So that is an example that we have to go through as well. And last but not least, I want to share with you this particular currency markets, which I feel have the potential to move at least 2,000 pips, right, over the next few months. So with that, right, I'll see you in this week's market analysis. Talk to you soon. Alrighty, so first up, we want to look at crude oil, right? Because I think crude oil is a market that has garnered a lot of attention, right, on the media, right? Even as a normal consumer like you and me, right? We are, if you're pumping petrol, you are concerned with the price of oil. So I would say this chart is basically pretty much relevant to, consumer all over the world. So that said, this is the daily chart of crude oil, right? In fact, I want to go one time frame higher, which is the weekly time frame. So on this chart over here, right, the question is, has crude oil bottomed in the markets? And for me, for it to actually show signs of bottoming, or even for me to change my bias from short to bullish, right, I need something to happen, right? And what is that something that I'm looking for? It's very simple, right? On this weekly chart right now, you can see that crude oil is clearly in a downtrend, right? If you just use a simple basic technical analysis, you know that price has been forming lower lows and lower highs in the market, right? Here, lower highs, lower highs, lower highs, and lower lows, lower lows, lower lows, and lower lows. So just using basic technical analysis, you know that the market, right, the structure of this market on the higher time frame, the weekly chart, is clearly in a downtrend. So if you want to, be a little bit more fanciful, right, you know that I have the two moving average over here, the 20 and 50 period moving average. They are also clearly pointing towards the downside. This is the 50 EMA, this is the 20 EMA. Both of them are pointing down lower on the weekly time frame. So you know that, on this time frame, the weekly chart, is that the long-term bias is still towards the downside. So you may be wondering, right? Okay, Rainer, right? So what are you looking for before you actually determine that the downtrend is potentially over, or crude oil may be showing signs of bottoming? So I'm going to tell you what I'm looking for. This is what I'm looking for. So there are basically two factors that I want you to pay attention to, right? Notice the first thing, right, is the 50 EMA. Over the last, I would say, since it collapsed over here in May 2014, and right now price is about January 2016, right? The 50 EMA has been above prices, right? In other words, right, the weekly price of crude oil has been below the 50 EMA. So the first clue that I want to see is price rally and close, right? Close above. Let me get rid of the lines. Sorry about it. I want price to close above the 50 EMA. That is one, the first thing. The second thing that I want to look for is that I want to see a new higher high and higher low. So at this point in time, we don't have any higher high or higher low. In fact, price just made a new low, right? And it seems to be doing a retracement right now. So for it to make a higher high, it has to take out above this swing high over here on the weekly chart. So that means crude oil have to rally high enough, right, and finally break and close above this structure resistance over here. Okay, and after which it has to retrace lower, right, and then break out higher once more, giving you a higher low. So when you have a potential higher high and a higher low, and price has closed above the 50 EMA as well, then you can come up with a conclusion that crude oil may potentially, form a bottom. But in the meantime, right, till that happens, right, which is clearly it may take, weeks or, maybe even a few months to play out, right? In the meantime, my bias on crude oil is towards the short side. And that's it. Just because that I have a bias towards the short side, it does not mean that I am short crude oil, right? I still need a trigger, an entry to go short on crude oil. So actually, if you recall, right, I just basically got stopped out of my crude oil trade on the trailing stop loss when price closed above the 20 EMA. So right now, I have no signal to go short, right? So what are some signals that you can look for on crude oil? Again, very simple, basic price action you can look for. This is a potential area of resistance, a swing high. You can wait for crude oil to trade higher, right? Taking out the highs and then close lower below the resistance, right? In other words, doing a false breakout. That can be in the form of a pin bar, an engulfing pattern, right? These are a few things that you can look out for. So that's it, right? This is my take on crude oil. I am not convinced that the market here is bottoming as of now, right? Because I still need further evidence for it to, actually trade higher. As what I've shared with you, right? For it to actually close above the 50 EMA on the weekly time frame and to form a higher high and higher low. That may take a few weeks or a few months to play out, right? I have no idea. But that's it, right? That's my take on crude oil, and let's move on to the next currency pair, which is basically, right, basically shook the media or the financial markets this week. So we are looking at basically the dollar yen. So you can see the dollar yen, right? It is clearly in an uptrend. Again, how do I know that? Right? You may be wondering, Rainer, why do you say it's an uptrend? Well, look from left to right of your chart. Do you see higher prices? Well, clearly you see higher prices. Am I right? You have higher lows, higher lows, higher lows, higher lows, higher lows, higher highs, higher highs, higher highs, higher highs. Then I'm sure you ask maybe a 3 or 4-year-old kid. You ask them, what is the chart showing? Is it pointing higher or is it pointing lower? I'm sure most of them can tell you it's pointing higher. So long-term bias for the dollar yen is still towards the upside. But that said, you may be wondering right now, okay, Rainer, what about dollar yen? When will you, turn bearish longer term? So again, right, there is a key level that I want you to pay attention to, right? It's what I call basically the last line of defense. So basically, every time when you want to change your bias from long to short or short to long, you want to reference from an objective measure in the market. And you want to reference using that measure and let your trading decision be made based on that measure. So for the dollar yen, what is the measure I'm looking for? It's actually none other than this area of support. It is a significant area of support, right? It's somewhere between the, I would say, okay, let me get up, 115.5, right? The 115.500 and 117 even, right? This is an area of support that is significant, right? Because if the bulls were to maintain control of this market, they cannot let go of this area of support. So you can see it is significant because, it tested once, tested twice, and this is the third time it tested it. So you can see the bulls are still, clearly in control, right? The BOJ announced negative interest rate this week, right? So we saw it rally in these higher prices. I'm not long this market, right? I didn't even catch any of this move, and this is it, right? Sometimes you are in trades that seems favorable, and sometimes you are just not in any of these trades. So I'm not in any of this, the yen move. I don't regret it because I'm simply just following my plan. So that's it. This is a key area on the dollar yen that you want to pay attention to. So you want to reference it from this area of support. So how do you use it? So very simple. The markets is making higher highs and higher lows. So in the meantime, right, in the longer term trend of the dollar yen, you want to stay long in the long term. And where would you, stay neutral or even go bearish? It is when this key support area is broken, right? So if dollar yen breaks and close below this key area of, pardon my drawing, right? I know it looks horrendous like a 2-year-old drawing, but pardon me, right? I'm still 2-year-old at heart. So this, okay, this, if it breaks and close below the area of support, then that's when I will, be more, I would say, bearish on the dollar yen, right, in the longer term. But till that happens, right, my take on the dollar yen is still towards the upside. So this is a very simple reference on the chart that you can use, right, to look at it and tell yourself, whether you're gonna stay long or you're gonna stay short. And sometimes, right, sometimes the market is just undecided, right, and that is where you just want to stay out completely, right? If you can't come up with any decision, right, the market price action is something that you don't even understand, then if that's the case, just stay out, right? Nobody is forcing you to put on any trades at all, okay? And that's it, right? Let's talk about the pound dollar, right, a trade that I spoke of last week as well. We talk about the pound dollar, so just briefly walk you through, right? This was the area of resistance I spoke of. I said that I really like this setup because we have a false breakout higher, taking out the stops above this high. So basically, I said that if you want to take this trade, right, some areas that you could look for to take your profits is this swing low over here and this swing low over here. So depending how you manage the trade, if some of you took half your profits at this swing low and set the remaining to break even, this would be a winning trade. If some of you who are more aggressive, right, targeting this swing low entirely for all your position, chances are you'll be stopped out. So you can see right here, right, that the entry is just part of the equation, right? Your trade management, your exits is equally important, if not more important than the entry itself. Because you can see, right, two traders. Okay, let's walk you through once more, right? Two traders enter at the same price, but they manage their trade differently. Trader 1 has the plan of, taking half his profits at this swing low and set the remaining to break even and look to take the remaining half at this swing low over here. That's trader 1, and he'll be in profit on this trade, right? It's a positive trade. For trader 2, right, let's say he's more aggressive. He is the either go big or go home type of trader, right? He decides to ride this trend lower. So he decided to go short as well, same as trader 1, and decided to target all over here. But in this trade, right, he went in his favor slightly before stopping him out for a loss. So don't get me wrong, right? I'm not saying that trader 2 is wrong, right? Because honestly, if you play out the trades, right, a large number of trades over the long run, right, chances are trader 2 will be a more profitable trader, but it comes with a larger drawdown because he's going for a pretty big profit target. Okay, whereas for trader 1, he will not be as profitable, but he'll be more consistent in his returns. The drawdown will be lesser as well. So you have to ask yourself, what kind of trader you want to be? A trader 1 who, takes his profits progressively along the way, or trader 2, who really has, a larger profit target for his entire position. So this is something really important to think about, and this goes to show you perfectly that your trading entries is just part of the equation. Okay, you also need to take into consideration your trade management and your exits. So that's it. I want to cover with you a last thing, right, which is euro dollar, because I see a potential big move in the market. So let's have a look at euro dollar. This is the weekly time frame. So you can see, I think euro dollar basically make the headlines, I would say, 1 or 2 years back, where he had this massive slide off lower due to the, the Greece financial issues, etc. So it's a very big sell-off. But in 2015, right, euro dollar is basically in a range. You can see it's in a range between these highs and these lows. So a lot of time, right, traders thought the move would actually continue lower. In fact, me as well. I thought, we could see a further slump in euro dollar in 2015. But, well, it didn't happen. So maybe 2016 could be a year, right? We don't know. So what I want to highlight to you is that there is a potential move on euro dollar that I want you to pay attention to, right? Looking at the weekly chart, you can see that euro dollar is still clearly very bearish in the long term. I'm talking about long term down here because we are looking at the monthly chart. And the levels that I want to pay attention to, I want you to pay attention to is this highs and this lows over here. So you can see, right, euro dollar right now is in a consolidation. And if it does break out, chances are it's going to, target the next structure in the market. So where is the next structure in the market after the breakout? If you look at this based on this chart, you can see that the next structure comes in at this high over here if it breaks out higher. Right? If it breaks out higher, it will target this highs over here. Okay? And if it does breaks out lower, it will potentially test this lows of 2011, somewhere around here, which is this lows over here. So that's it. The potential move of this magnitude we are talking about is, if it breaks out higher, we are looking at almost a 2,300 pip move. And if it breaks out lower, we are looking at a potential 2,200 pip move. So euro dollar is, I would say, in the longer term time frame, right, there is a potential big move that could potentially happen. So that's it, right? As a trend follower, right, if I were to adopt a trend following position, I would basically be flat on euro dollar right now. My only interest to trade this market is when euro dollar breaks above this high over here or breaks above this lows over here. If it does not do any of that and remains in this consolidation over here, I will not adopt a trend following position because the market is still in a range. I want it to show me where it intends to go before I take up a position. So trend following is a very patient thing, right? You need to really exercise a lot of patience. And you may be wondering now, okay, Rainer, right? I know I cannot be itchy fingers. I cannot, enter my trades prematurely. So does that mean that for euro dollar right now, I just stay out and do nothing? Well, it depends, right? If you have trading strategies or trading approach that can actually capture swings in this market, then you can actually adopt a swing trading approach on euro dollar right now. So let me share with you how you can actually capture swings on euro dollar, even though it's not going anywhere in terms of trend. So for swing trading, it's pretty simple. You just identify the areas of value, like support and resistance, right? So I identify this area of resistance. I identify the area of support, right? You can see. So this is the area of resistance, potential area of support, potential area of support. So all you need to do is just wait for price to come to these levels and show you that it's rejecting the either higher or lower prices. So for example, this one over here, I'm looking at this setup over here. If euro dollar were to trade lower, right, and it forms a price rejection where it trades lower and then it closes higher again, this is a form of price rejection, and you can be sure I will look to take this trade towards the long side, right, and look to target at this highs over here, right? And similarly, if it trades higher, let me get rid of the lines. If it trades higher, right, back to this highs over here and shows you another price rejection and close lower, you can be sure I'm going to short this market, right, and take profits at this swing low over here. So this is what you do, right? When the market is not conducive for trend following approach, you can think of other suitable strategies to trade that kind of market condition. And I would say this is slightly more advanced because you would need to put on two hats, right? A swing trader hat and a trend follower hat. So it may take time for you to actually adopt both methodologies, but it is a viable one, right? And again, you don't have to do this, right? You can be a more patient trader and choose not to trade. That is entirely fine as well, right? So there are really many ways to skin the cat when you're talking about trading. Okay, so I hope I give you some light and some ideas that help you improve your trading. So that's it, right? If there's any questions, right? If there's anything you want me to answer, right? Just leave it in the comment section below, and I'll get back to you, right? So in the meantime, right, I would like you to hit the subscribe button below, right? So you can always stay up to date on my latest videos. So with that, right, I wish you good luck and good trading. I'll talk to you soon.